Hello and welcome, Rahul. You're watching me on my YouTube channel, my talk show. And if you're watching me consistently, welcome back to my channel. Whenever I come in front of you, I want to instill positivity. I want to foster such an information based environment where you can enjoy listening to me and can make your knowledge base much more profound. Today I will be talking about very important thing. If you are a consumer or if you are a banker, you will try to know exactly how to appraise loans, and how to do loans. If you don't have understanding how loans are processed, how can you apply for the loan, or how will you know exactly that these things are needed for doing the business easily, or if you really want to do loans. So today I'm going to dive into each and every segment of loan, how to appraise that, how to do credits, how to sanction credits, how to do appraisal of that, in banking terms, appraisal. But if you're a consumer, you would know exactly what you need in order to get your loan sanctioned. I will be talking about personal loan, pension loan. I will be talking about car loans, home loans, then education loan, jewel loan, and thereafter I will move into agri sector, how to do crops loans, or how to do tractor loans. Thereafter I will move into MSME sector, how to do petrol pump loans and how to do big assessment of loans, working capital assessment and term loan assessment. I would like to cover it all, but I know exactly that this is a very huge topic. If you integrate all the three verticals of banking, like retail, agri and MSMEs, especially about advances, it will be a huge topic. But I would like to tell you exactly in such a mesmerizing tone that you will be having an insight how to do appraisal of that very loan and what is needed, and you will move forward. If you listen to me till the end, you will have comprehensive knowledge. That is what I guarantee you. So let's start from retail sector. Suppose if you want to do a loan that is called personal loan or salary loan, how will you take loan? How will you approach bank? I'm not going to talk about documents required, because they will tell you exactly what documents are required. But I'm trying to tell you exactly how much loan you will get and what is the process, to get that very loan, how your loan will be appraised. If your salary is suppose 60,000 rupees, you're approaching a bank, they will ask you to give salary slip of 6 months, and then income tax return if you have, otherwise form 16 for 2 years, for assessment, what is your salary, that is what they will assess. And most of the banks try to finance, 20%, 20 times of your, gross salary. That is what is the maximum cap, that is. But you know exactly that in retail loans, in salary loans, you can only pay EMI up to 60% of your gross salary. Just note that 60% of your gross salary. If you have 60,000 rupees of your gross salary, you can only pay EMI up to 36,000. Beyond that, no bank would like to sanction as per the RBI rules. So that is what is the restriction. Suppose you have 60,000 rupees of monthly income, you are approaching bank, then what they will do, they will ask you that they can sanction maximum up to 20 times. That means 12 lakh. 16 to 20 is going to be 12 lakh. And 12 lakh in your case, if you have 60,000 of rupees of salary. But once again, they will also see that 60% of that, that means 36,000. If that EMI, neck to neck EMI, if your EMI is coming 60,000, then only they will allow that. Otherwise, the volume of loan will be diminished, as per 36,000 of requirement of loan repayment, 60% of your gross salary, nothing more than that. So you would understand exactly. Just go and calculate on your financial calculator EMI, of 12 lakh. If it is coming below 36,000, just it is done term loan, actually the 5 years or 7 years maximum. So put them for 5 years or 7 years, and the rate of interest is almost higher on personal loans. So put 10.5 to 11%. 10.5 or 11% you calculate there. If your EMI is coming below 36,000, or up to 36,000, they will sanction that much amount of loan. So you understand exactly how salary loans are done. Pension loan exactly the same way, because the pension is credited directly to your account, and pension up to 75 years of age they can get, loans. So maybe pension loan could be a 5 year term loan, 5 years of period, repayment period, 5 years of term loan is perfect for pension loan. So if you are 70 years of age, you can get 5 years of term loan. Before 3 months, there are certain conditions in every bank that before 3 months of your in the top retirement, in salary loan, before 3 months they will So they will try to close. But here in pensioner, you have to leverage up to 75 years. Here 5 years you can get easily, and up to 75 you have to close your loan. So is pension loan, they will appraise the same way as salary. You know, 5 years they will calculate 60% of EMI, maximum they can give you. But sometimes quantum of loan they can decrease, not 20 times or 15 times maybe, or 18 times maybe of your gross salary or your gross pension. That is what they do. It differs from bank to bank. So it is not a much of difference between pension loan and salary loan. You understood exactly that pension loan can be done up to 75, whereas salary loan after retirement they try to close that 60 years of age. They try to close that your salary loan. Before 3 months of that even they try to close that. So this is the difference. Next one is your car loan. How will you get a car? Everyone in this in this century, they want to drive a car, and everybody has very fond. They are fond of having better car in their life. How will you get a car? And if you're a salaried person, you'll approach a bank. They will ask you quotation. And your salary slip of 6 months and 2 to 3 years of income tax return. They will ask, you have to provide them. And what they will do, they will look after your salary. And first of all, if you approach a bank with quotation, what they will finance, in quotation you see that in car loan you have ex showroom price, you have registration RTO fee, thereafter you have insurance fee in car. Thereafter, when you will approach any private car showroom, they will also add certain accessories. But bank would not finance your accessories. They will only finance showroom, and thereafter insurance, thereafter RTO. They will add all together whatever amount will be there. They will take 15% of margin of that. Suppose 6 lakh rupees of car, then 15% of margin, then 90,000 rupees will be margin. You have to bring it from your pocket. What is do you call down payment? And 5 lakh 10,000 they will finance there. That is what will be your term loan for 5 years to 7 years. Car life is almost 15 years, but they finance 5 to 7 years, 7 years after term loan, up to the finance. So, but you get 60% of your EMI. You can get, exactly on your salary. But if you are a businessman, suppose, how will you get your car? So for businessman, there is another assessment. They will do assessment on your balance sheet. That is what you have to do. And once the balance sheet comes into picture, everybody has to see what is your profit after tax, PAT, what is your balance sheet means. They will analyze your balance sheet, your current asset, your current liabilities, your profit after tax, and they will also assess DSCR, debt service coverage ratios. These ratios I will talk detailed in last, because there I will talk about term loan assessment, how will you do perfectly. And if I will describe here the video intention, you won't understand. But debt service coverage is nothing else. It tells exactly how much profit you're making, and if you are making profit is really perfect or not for paying the debt obligations, term loan obligations, debt, term loan principals and interest. They will add there in denominator, in numerator, the profit after tax plus depreciation. Depreciation they will add because it is non-cash item. Thereafter, they will add interest on term loan as well on numerator side also. So this ratio gives exactly insight that your earning will cover the debt exactly throughout the period or not. That is why gross DSCR, and each and every year they will calculate for each and every year your DSCR. They will analyze if it is 1.5 above DSCR and 1.75, then it is very good. 1.75 average gross DSCR, all the numerator of 5 years to 7 years, and thereafter denominator they will add and they will divide that. That is what will be DSCR. So DSCR they will calculate in your balance sheet, and that will tell how much stronger is your balance sheet. They will also see the current asset ratio. It should be 1.1 exactly. That will be better, and above that that will be also better. But below that, in some cases they compromise. They don't allow that. If it is below 1.1, that is what is the mindset of bank. They analyze your balance sheet. If your profit is okay, sometimes they will take average of your 2 years annual gross income. They will divide by 12 monthly income they will take, and thereafter 60% of that they can only finance as an EMI. So both will be analyzed. Did you understand? So many people don't understand exactly how to get car loan on their balance sheet, but now they know exactly. If they're filing ITR and GSTR return, they can get easily. They can get. Now you knew how to get car loan. Next is education loan. Education loan is very important for shaping the life of students, because if they will become educated, they can do miracles for our country, and that should be promoted. I know exactly that if students are approaching, there is a very conservative mindset in banks, and they don't want to finance because it is unsecured loan. The future is prospect is not good in India, especially in developing countries. But if you really look closer, if development will happen, job creation will happen, then it is the most important and imperative thing that should be done. So for education loan, when you approach a bank, what you have to bring? You go to your administrative office in your college, ask them that give me a chart, what will be expenses, what we have to pay each and every semester or each and every year to you. They will give you a chart. They will give you tuition fee, examination fee, and hostel fee, and all those fees that they ask each and every year. They will prepare that for 4 years or 5 years. If you are doing professional course, they will give you chart of each and every year, and the final chart will give everything, your tuition fee, your hostel fee, your examination fee, and all that. But when you approach bank have a conservative mindset. They do not reckon each and every expenses. They keep certain margin. And most of the banks are not financing even hostel fee, but it is requirement because it is huge for students. But some of the banks are financing hostel fee as well. So if you reach better banks, you'll be able to get that. So what they do actually, they calculate each and every year's expenses. First year tuition fee, then examination fee, another additional fee for your computer, and as well some banks include hostel fees, some don't include. So they will add that, and then they will keep 15% of margin each and every year, till fourth year or till fifth year. If you have 5 years of course, they will add up that, and they will add all total, and they will try to finance that. And what they take, because it is unsecured loan, they try to project assignment of your future income. They try to project your future income, and because of that, the repayment capacity of yours will be derived from there. If you have suppose some earning in future after completing the course, suppose 50,000 rupees, then 60% of that, they will assume the EMI of that, and then they will include that. But otherwise, if you have co-applicant as your father, and your father is earning, his earning will be also reckoned for repayment. So though your future income and his income will be added, and then they will make a projection of that, how they will repay, and thereafter disbursement schedule will be made for your loan. Each and every year how much will be disbursed as per your requirement of your college. They will make a DD in that way college name, they will give that, and you go on to give it to your college. Each and every year you have to take a letter in previous year that you have paid that amount. You go and give requirement of next year, again as per disbursement schedule, they will give you next loan or next component. So this is the understanding. Future assignment of future income is done in education loan. That is what will be security to the bank. So you understood education loan as well. Next one, suppose jewel loan. It is nowadays very favorite loan for all the people because it is hassle free. I would like to tell government that is norms in jewel loans. They are trying to bring more and more complications in jewel loans, because they are also seeking private institutions that they should be a more better player in the market rather than banks, and that is why RBI is coming with stringent actions on commercial banks and nationalized banks. That is why I know exactly it is okay if they are putting money in your pocket, and as an administrator you should understand exactly that promoting nationalized bank is more important. It will be really good, because in jewel loans the placing of gold happens. Gold is placed to the bank. So what happens? You have security, full security. When you approach the bank, what they will do, some banks do try to do finance on 22 carat, of golds. If you have 18 carat, some of the banks will finance, but they will convert the amount to 20 carat as per 22 carat. 22 carat they will determine price per gram, and they will multiply that, the whole price will come, and then they will sanction about that. I would like to tell you that understand 70% of your 22 carat gold you know will be almost sanctioned. Just keep in this rough calculation in your mind. 70% of your gold value, market value, will be given to you as a loan. What they do have a scale of finance, per gram they will bring as per 22 carat, 24 carat, 20 carat. They have different structure for that. They will multiply, and they will bring that. But almost 70% of your value you will get. That is what happens in gold loans. So whoever is coming to you you can see roughly that 70% of your market value will be financed to you. A gold appraiser will come, he will appraise your gold value, he will take purity of your gold, then he will drive the value as per the market value, as per the given scale of finance of bank, and almost the same we will get as your loan. This is the term loan, mostly done for 12 months, short period of time, or after 12 months you can repay it in one term bullet repayment, or some banks also facilitate you as on EMI, but very few it happens. In India it is prevailing that 12 months of loans should be given to jewel loans consumer. That is what is happening in jewel loans. What next? Loans against deposit, overdraft loans, or loans against NSC or KVP. It happens, 90% of your deposit value, if the same money is deposited in that very bank where you are getting loan, 90% of that they will give you. Only 10% security they will give, because this is liquid money they are keeping, and you have deposited with bank. 90% of overdraft they will give you instantly. If you approach bank, they will give you in minutes, 5 minutes. If you have liquid security of your deposit in that very bank, or if you have KVPs, which is deposited with the uh, uh, post post bank, or what you called it. uh, um, then what happens exactly? For KPs they have more margins, about 15%, 25%, some cases, so they will try to sanction you 75% of that. Then they will send KVPs to the same post office where you have deposited your KVPs, where you have taken from there. They will give for assignment of that. Then the postmaster will do assignment again. They will the return will come later, and then assignment of that KPs will be done, and then you will get that big money. So a little bit of time taking process, not much more. It happens quickly as well. So you knew that also. What in retail sector remaining? Anything else? If you can remind me, I will tell you. In housing loan, housing loan, one of the most important loan that you should know exactly. Housing loan, how will you know exactly that how much loan you will get? Housing loan is a term loan which is for long term. They will give you for long term, because it is infrastructure loan, you know because the building and land can sustain longer period of time. That is why the term is very high, 25 years, 20 years, 30 years. Most of the bank are providing a loan up to 30 years. you know if you're a salaried person, you're approaching a bank, what happens? Actually, estimate is done on your housing project. You'll put your estimate. Most of the financing happens on NTSP, net take home pay. The same rule applies here. 60% of your NTSP, or if it is in some cases or special banks, they impose that if the 50 lakh and above is your gross salary in year, then 50,000 of monthly you know take take home pay can be also sanctioned. It happens. Suppose 60% is the maximum EMI. So 30 years, 30 years is a long period. If your salary is 60,000 rupees, you want to take 50 lakh rupees of your home loan. For 30 years at 7.5%, the only EMI will come 35%, 35,000, So for 60% of 60,000, 36,000. So you are eligible even for 50 lakh rupees of loan, for 30 years. Up to 70 years they can give you. So if your age is 40 years, for 30 years you will be sanctioned. Your salary is 60,000, 35,000 something is your EMI. You're getting that 7.5%, 50 lakh rupees of loan. So most of the cases, most of the bank also keep a upper limit as 72 times of your gross salary will be given to you. The 72 into 60,000 will be 43 lakh with 50,000. Then the amount will be reduced a little bit if they are imposing, but most of the banks are removing that criteria and they are bringing net take home pay criteria. But some of the banks are keeping both the criteria still. So these are the process of your home loan. The home loan, what they put collateral, but actually your home and your home loan, the property on which you're building a home is the primary security of the bank, and not collateral. Collateral will be there in CC loan limit appraisal, I will tell you, but in here it will be primary security, because it is being created out of the finance. Whatever you are creating out of the finance is called primary security of the bank. Whatever you are making, whatever you are buying as a stock, these are the primary security. So you understood? Suppose you are not salaried income. Again, Your ITR will define how much profit you make, how much income is yours. Your yearly income will be divided by 12, and then your monthly income will be decided on average income of 2 or 3 years they will take, and your monthly income will be decided average monthly income, and accordingly 60%, you know, EMI and 40% takeover, net home take pay, net take home pay or whatever you say, will be there. But if you are a businessman, they will see the same DSCR I have elaborated in my previous time. Just want to elaborated DSCR. What is DSCR? They will also take consideration of TOL by TNW. Total outside liabilities, whatever liabilities of your firm is there. Divided by total net worth, tangible net worth. Tangible net worth. What is net worth? Capital and reserves and surplus. These are your net worth. When you minus intangible asset from that very net worth, it becomes your tangible net worth. That is what you will divide there. So they see exactly that your outside liability, outside liability, how much it covers for your total net worth. For 1 rupees of your net worth, if 2 rupees is business, you know outside liabilities, that means for each and every 1 rupee you are taking 2 rupees of loan. That is what your business is all about. So up to three, 3:1, it is okay for bank. 1 to 3 is very good, because it is allowable that you will bring 3 rupees of debt in your business. The business will be perfect. But if you will go 3 to 5 or above three, then the risk is more. The risk is more. The promoters money is very less as per the date. Then they will put stringent credit monitoring rules in that way. If it is going higher, then they may restrict. They will not try to sanction. It may happen. So that is what is done. And DSCR, the total payable capabilities, as per profit after tax minus dividends plus depreciation plus interest on your term loan divided by interest plus principals of term loan. That is what will be a DSCR. That is what each and every year projected average gross DR they will see. 1.75 and 1.5. If it will be allowed, then only they will sanction you the loan. Now you understood everything in retail sector. Now we should move in agri sector. Agriculture loan for our farmers. It is important. Since some years before, 10 or 20 years before, we were totally dependent on agriculture products and agriculture. But now we are shifting towards service sector as well. But still agriculture sector is very important for India, for developing countries. So we should finance crop loans, KCCs, to customers, to farmers. How KCC is done? For crop loans, if you will be knowing, then only you can finance, how it is appraised. Actually, what happens at each and every district level, there is a DLTC, district level technical committee. It gives a chart, and gives you in which scale of finance is there, cost of cultivation, scale of finance per acre. They will give each and every produce in that very district. If paddy is happening, wheat is happening, tomato is happening, for each and every produce, they will give you a special scale of finance. That is what is the work of DLTC, and each and every bank will follow that very chart, that very norm. That is what they do. But how it is appraised, especially in India, there are two types of crop pattern, crop seasons, Rabi and Kharif, they used to call. Suppose in one season which happens, and next season paddy will happen. And if you have certain land when which you will do, farming, it will be irrigated or not irrigated. As per their irrigation or non-irrigation, they will give you the cost of finance. So if it is irrigated, put it irrigated, and if it is non-irrigated, then non-irrigated scale of finance will be different, because it is rain fed. Everything you have to understand exactly how to do appraisal. Yes, 2 seasons I told you. In wheat, one season wheat is happening, next season paddy is happening. For each and every scale of finance is given per acre. If you have 2 hectare of land, then they will convert it into acre. Suppose if it is 3 acre, then per acre they will give you cost of finance just multiplied by 3, and total wheat pattern will come, wheat, thereafter paddy will come, a scale of finance for the same thing, and the both will add. That will be total cost of finance, total cost of cultivation. That is what will be cost. But they also give one technical thing that is called sales price. In 1 acre, how many kilos of that produce will happen, and what will be the selling price of that will produce. So you can also calculate how much produce is happening how much sales could be made out of that very land, and thereafter the sales will be the cost of cultivation will be minus from total sales, and that surplus will be your surplus, produce surplus, which will be available for repayment. 50% of that will be returned for repayment. So that is what they do. The cost of cultivation they will add, for each and every pattern. What is they call khasra in UP, Khatoni and Khasra. Khatoni will tell you how much land you have. Khasra will tell you the crop pattern. According to crop pattern, they will multiply cost of finance as per acre land, and that is what they will get. When 10% of cost of cultivation, as they will add in that, and 20% of also as maintaining farm assets, 10% of post harvest requirements. So 10% of that, 20% of that, these two will be added to cost of cultivation. That will be a first year limit, and each and every year 10% towards cost escalation will be added. So five years, in fifth year, whatever will be the value, that will be a final limit of that way KCC. Now you understood exactly how KCC is done. Also, if you talk about allied activities, the same DLTC gives you the scale of finance, for 2 cows or for 2 buffaloes, for each and every unit, make it a unit, and for each and every unit, they'll give you a scale of finance. If it is a poultry, for 500, for 500 chickens, they will give you a particular scale of finance, and as per is the project, you just multiply that, that will be your limit. You can sanction that based on certain margins you also take, but these are the appraisals of KCCs and allied sector. One is tractor loan also. It also comes in agri sector, though it is a term loan, but it is used for agriculture purpose, and that is why it is coming in agriculture. What will happen in tractor? Can you tell that it is also a machinery just like a car? Yeah, but it is used for agri purpose. Then what will happen? They will also take the ex-showroom price, RTO price, and thereafter insurance, and they will try, based on that, they will try to finance that, but how the repayment will be calculated, as they defined that at least 3 acre of land you should have. So produce of farm, surplus, I have told you earlier in KCCs, produce of farm is also reckoned along with that whatever tractor you will get, it will have an income generation process. In a year, 600 hours of, you can use that very tractor, and for each and every hour, suppose 700 rupees is charged, and 600 into 700, that will be your yearly income of that very tractor. Then you minus whatever cost is coming towards petrol or diesel, whatever you are using as a, it's a fuel, just minus that, and whatever remains in your hand, just use it for repayment, for 5 to 7 years, that term loan will be there. So you understand exactly how the appraisal is done for agriculture loan as well. So you understood all these things, Now I will tell you about MSMEs, How will you do appraisal of MSMEs? In a video I have described how to do, working capital assessment. It is a very long video. If you really want to search, it is on my YouTube channel as well as in my Facebook feeds, but it will be difficult for you to navigate there. I just try to tell you exactly everything in one, but video is getting very long and nobody would like to see that. So I would like to make it in next video. Thank you for listening to me.